Gold is the most sensitive to this threat, right? To the threat of sovereign credit of the United States, to a threat to the U.S. dollar system of the global monetary system. Gold is where you see it first, just like subprime was where you saw it first. The rest of it happened later, but too many people were dismissive because they said, well, we haven't seen anything yet. Yes, we haven't seen a bigger surge in base metals. I mean, they've gone up, but not as much as gold. Yes, we haven't seen a huge rise in bonds, but we've seen a rise. Long-term interest rates have gone up, despite the fact that the Fed has been cutting short-term rates. So that's already happened, right? That was already something that the mainstream did not expect, that rates would rise as a result of the Fed rate cuts. I was predicting that.
Gold has broken through the $4,000 barrier for the first time, marking a milestone reminiscent of the 1970s. Peter Schiff, an economist and gold advocate, explained that yesterday marked a historic milestone as December gold futures traded above $4,000 for the first time ever and even closed above that level. While the futures price reflects delivery later in the year, Schiff pointed out that the real story came today when the spot price of gold, the immediate market price, finally broke through $4,000 as well. At its intraday peak, spot gold climbed more than $50 above that mark before easing slightly but still holding strong above the key psychological level. Schiff noted that year-to-date gold has surged an impressive 54%, a performance unmatched since the 1970s. Silver, meanwhile, also had a remarkable run, briefly trading near $50 before pulling back slightly. Schiff drew parallels to the 1970s, a period of historic inflation and monetary upheaval. He reminded listeners that the last time gold performed this strongly, the U.S. had just been taken off the gold standard by President Nixon in 1971, a move originally meant to be temporary but which fundamentally reshaped global finance. Schiff recounted how, prior to that shift, foreign central banks could redeem their U.S. dollars for gold at a fixed rate of $35 per ounce, making the dollar as good as gold itself. Once that link was severed, however, the dollar became a fiat currency backed only by government decree, not by tangible metal. Schiff emphasized that this change laid the foundation for today's monetary instability and the renewed surge in gold and silver, suggesting that current events may prove just as economically significant as those that unfolded half a century ago. If you found this video helpful, don't forget to like, share, and subscribe to stay updated. We'll continue delivering sharp insights and expert perspectives on the forces driving gold, silver, and the broader financial landscape. Thanks for watching.
Well, yesterday, December gold futures traded above 4,000 for the first time ever. In fact, I think they closed above 4,000. And that became a pretty big news story, at least in the financial media. I listened to quite a bit of coverage of $4,000 gold, although technically gold was not at 4,000 yesterday, because the December futures contract is the price to pay for gold that's not going to be delivered until December. The spot price is what I pay attention to for records. And yesterday, spot gold never quite made it to 4,000. I think it came maybe $10 away at its peak, but it didn't get to 4,000. Well, that changed today because spot gold blew through 4,000. In fact, the intraday high, I believe, was 4,050 something. So we got more than $50 above 4,000. I think, gold was up better than $70 on the day at its high, although it closed off its high, maybe up about $50, $55. And as I'm recording this podcast live on Wednesday evening, gold's down another $23 in early Asian trading. So it's trading back below 4,020, but it's still holding above 4,000. Now, look, obviously, gold could go back below 4,000. I mean, that's not some kind of line that can't be crossed. And it's hard to say whether or not we're going to have a pullback from here. I mean, certainly the market is due for a pullback. I mean, we've come a long way. In fact, year to date, the price of gold is up 54%. I I mean, that is a huge move. First of all, the year's not even over yet. We still have most of the fourth quarter left. But the last time gold was up this much in a calendar year was the 1970s. Now, that was a very significant time period. And by the way, silver rose today by an even greater percentage. It actually traded above $49.50 at the high. As of this morning or right now, it's back below $49. I think it's trading around $48.80. But the intraday high, it got above $48.50. I mean, $49.50. So very, very close to $50, which is that key level for silver. But if you have to go back to the 1970s to find a year where gold was this good, and of course, it's not like gold had a bad year last year. Gold had a great year last year. It's just having an even better year this year. And of course, a 54% move from where gold was, dollar-wise, is a much bigger move. Think about the value of that move, because you're talking about a metal that's already, mid-2000s and moving up to 4,000. That's a big dollar value of the rise in what all the gold is worth. But if you've got to go back to the 1970s to find something like this, that probably means that what is happening now is likely as significant as what happened then. Now, what happened in the 1970s? You got to understand this, because it was 1971 that Nixon took us off the gold standard. It was supposed to be a temporary move, but it's now been better than 50 years, and we didn't go back on it. But that was a very significant development, because up until 1971, if central banks in Europe or anywhere held U.S. dollars in reserve, which they did, they knew that whenever they wanted to, they could take those U.S. dollars back to the U.S. government and exchange them for gold. It was a fixed rate. If you had $35, you had an ounce of gold. The Federal Reserve note was basically a receipt that paid the holder of that receipt an ounce of gold. You had $35, you could turn them in, and you could get an ounce of gold. Now, in the meantime, you could take those $35 and buy U.S. Treasuries and earn interest, which is something you couldn't do on your gold. But by allowing the Federal Reserve or the U.S. government to hold your gold, which is basically what the world was doing, right? We were the custodian of the gold, right? So Germany or Italy or France or the UK, they hired the U.S. government to hold custody of their gold. And we issued them a warehouse receipt in the form of U.S. currency that represented, a pay to the bearer on demand. Now, of course, at one time, everybody, right? You didn't have to be foreign to convert your paper into gold, right? The initial Federal Reserve notes before 1933, right, were redeemable in gold by everybody. So an American citizen that had $20, because back then the official price of gold was $20. So if you had a Federal Reserve note for $20, you could take it to the Federal Reserve and they'd give you a $20 gold piece, right? It was an even exchange. So that piece of paper represented an IOU for gold. In fact, that's what gave the paper the value. It was the gold that backed it up. Now, 1933, after Roosevelt, told everybody that to turn in their gold and made it illegal for Americans to own gold, Americans couldn't convert their notes into gold. But foreigners could. Right? It was only American citizens that couldn't get the gold. But if you were a foreign holder, you could still get gold. Now, Roosevelt devalued, so now you needed $35 to get an ounce of gold, not $20. But if you were outside the United States, if you were a foreign central bank and you held US dollars, you were still able to redeem them. In fact, the pieces of paper weren't dollars. The gold was the dollar. The dollar was defined as a weight of gold. The Federal Reserve note, which was the piece of paper, is an IOU for dollars. The dollars were gold. Now, they were also silver. And in fact, while it was illegal for Americans to own gold, it wasn't illegal to own silver. And so they had silver certificates. The Federal Reserve issued currency backed by silver, and you were able to get silver up until, we took the silver away in 1963, 1964.
Peter Schiff explained that countries seeking true financial independence are steadily moving away from the U.S. dollar to avoid the risk of having their reserves seized or restricted by U.S. policy decisions. He argued that this global shift has been a key force behind the surge in central bank gold buying, which in turn has driven gold's remarkable rise. Schiff warned that America's mounting debt, unchecked deficit spending, and political unwillingness to impose fiscal discipline have convinced much of the world that the U.S. will never restore financial stability. Even under leaders like Donald Trump, who once campaigned on fiscal restraint, government spending expanded dramatically, proving, in Schiff's view, that neither major party is serious about responsibility. He further criticized Trump's confrontations with the Federal Reserve, noting that his interference undermined the Fed's credibility and independence. Schiff believes this has trapped the central bank in an inflationary loop forced to keep interest rates low to avoid triggering a debt crisis. Combined with trade tensions and a weakening global perception of the dollar, Schiff concluded that these developments may represent the final stage in the decline of the dollar's dominance as the world's reserve currency. Let's get back to the interview.
If you want to have your own sovereignty and not have to worry about pissing off the U.S. and having us yank your reserves, you need to get out of U.S. dollars. And so they've been doing that. And central bank buying of dollars has been the primary reason that gold has risen so much. Now, recently, I think investors have finally started to buy not only gold, but silver. And that's why silver is finally catching up to gold and has made a bigger move, because for the years that central banks were the only buyers, they didn't care about silver. They didn't want silver. They only wanted gold. But now that retail investors and institutional investors are finally waking up to what the central bankers have known about for years, they're buying silver. And so this is the beginning of this next leg up. But what's more significant than that is what is going on behind the scenes. Why are these central banks doing this? And the other reason is the fiscal and monetary policy. Because it's clear now to everybody. I mean, it should have been clear years ago when it was clear to me. But, I guess for these big things, foreign central banks, it takes a while for them to turn, like, turning a battleship, right? It takes, it's a slow maneuver. But seeing Donald Trump win the presidency, yet advocate for the abolishment of the debt ceiling and the big, beautiful bill, which took the excessive spending under Biden, much of which had to do with COVID and which was actually started under Trump, but which not only kept all that extra spending, but added to it and just blew already huge deficits up even more. I think the world did some serious reflection to say that America will never get its house in order. Because if even the MAGA Republicans are unwilling to cut government spending, then who will? Certainly the Democrats aren't going to do it. So we don't have any party that believes in fiscal responsibility. There is no chance that either party will do anything about exploding debt. And so that basically lets our creditors know that they need to get out of dollars. They need to get out of treasuries because it's an accident waiting to happen. Also, with Donald Trump's packing of the Fed, his vilifying Fed governors, firing them, calling Powell, an idiot, a moron, a stupid person, right, really is destroying the credibility of the Fed. I don't even know why it had any credibility left, but whatever was left, right, Trump was destroying that. And, creating the idea that the Fed is not going to really be independent, that the Fed needs to do what the president wants, and the Fed needs to make policy based on our inability to pay interest on the debt, that interest rates are not going to be set based on where they need to be relative to where inflation is, but interest rates need to be low regardless of how high inflation is, because that's all we can afford, because we now have so much debt that the Fed can't fight inflation without bankrupting us. And so the Fed has to continue to create inflation. And all of this undermines the dollar status. And of course, probably the final nail in the dollar's coffin was probably the trade war. The stock market is going up. The economy is fine. And so, the subprime, it's no big deal. Yes, there's some, losses there, but it's not going to impact the overall economy. Everything is fine. The financial system is fine. And I kept saying, no, it's not. Just wait. This is the tip of a huge iceberg. And of course, I was right, because we had the rest of the crisis the following year in 2008. And I think that what gold is, basically warning, what this move portends is a crisis. Just like the subprime collapse was a harbinger of a financial crisis, gold soaring the way it is a harbinger of a dollar crisis, of a sovereign debt crisis. I was watching on Larry Kudlow last night as they were discussing $4,000 gold. And Larry Kudlow started his segment by saying, I don't get it. I don't understand, why is gold $4,000? Because Larry Kudlow thinks the economy is booming because Donald Trump is the president. See, whenever there's a Republican president, Larry Kudlow thinks everything is great, because as long as there's a Republican, he's going to be a cheerleader. And as long as that Republican cuts taxes, because that's all they think you have to do, just cut taxes and everything is going to be great. So we just had a tax cut. We have a Republican president. Why is gold at 4,000? He's like dumbfounded. And so he had a few people on, and they're talking about it. And one guy is like, well, maybe it's foreigners who are worried about inflation, because, people in Europe, they have concerns, and maybe it's the Europeans who are buying gold, right? Because they're worried about inflation. And so we don't have to worry about gold going up, because it's not Americans who are buying it. It's the Europeans, because they're the ones that have to worry about inflation. We don't, right? We don't have any inflation. Trump got rid of all the inflation, which is all a bunch of nonsense, because if that was true, gold would not be going up in dollars. It would only be going up in euros, right? So the dollar would be rising against the euro. So that gold would be flat in dollars. The fact of the matter is, gold is going up in all currencies because all currencies have an elevated inflation risk. But the risk in America, I think, is even greater given the potential loss of the reserve status. No other currency even has that status. So there's nothing to lose. Only America has something to lose. And what it has to lose is basically the pillar that's held up our entire phony economy. Without that reserve status, the whole, consumer-based economy that was built on top of that status comes collapsing down. So Kudlow and his gang refuse to recognize that the rise in the price of gold has any significance with respect to any warnings about U.S. inflation or about the credit worthiness of the United States. But that is what's going on. That is the reason that this is happening. But now you've got more people on Wall Street who are coming out and saying you got to own gold. 10%, 15%, 20% of a portfolio in gold. Now, they used to say 0%.
The growing rejection of the dollar, coupled with relentless U.S. spending and political dysfunction, marks a profound shift in global monetary confidence. As debt soars and the Federal Reserve loses credibility, the world is increasingly turning to hard assets as protection against inflation and fiscal decay. The mounting distrust in America's financial stewardship signals that the era of unquestioned dollar dominance may be nearing its end. Is the global shift toward gold signaling the beginning of the end for the dollar's dominance? So stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.